Welcome to CEF Insights, your source for closed-end fund information and education, brought to you by the Closed-End Fund Association. Thank you for joining us as Mike Taggart and Miguel Laranjeiro of Aberdeen Investments discuss the municipal bond fund market. Mike is Aberdeen's head of closed-end fund investor relations. Miguel is investment director and portfolio manager for Aberdeen Municipal Income Fund, ticker symbol MFM.
Okay, thank you everyone for taking the time to learn about the Aberdeen Municipal Income Fund, ticker MFM. Aberdeen recently became the investment advisor for MFM, which is a much larger fund than it was under previous management due to other funds being merged into it. The board has already increased MFM's monthly distribution by 25% in mid-June. The fund now pays 3 cents per share per month. And because of all these changes, I thought it would be appropriate to have Miguel discuss the municipal market, the team's investment approach, and the fund itself. Miguel, thanks for taking the time. And
thanks, Mike.
Yeah, let's start with the big picture and then work our way down to the fund level. So what are the key macro forces affecting muni credit fundamentals right now and market technicals?
Yeah, so the economy has been really resilient despite the geopolitical tensions in the Middle East. We've seen the consumer continue to spend, perhaps not quite at the pace as they spent in 2025, but a solid consumer, no doubt. And we've seen the economy supported by macro tailwinds and AI CapEx spending, which has been supportive of economic activity for both state and local revenue collection. So the backdrop fundamentally looks really solid from a fundamental point of view in terms of the health of the economy, and that's going to affect the Fed trajectory.
And so, I mean, obviously the Fed trajectory in terms of the rates, municipal rates tend to kind of track that, right? But they're not identical. What does the underlying economy say about kind of state revenues and that would affect municipal bonds?
Well, tax collections are up year over year. Some of that is because of the inflationary influence that we've had from geopolitical tensions. Everything costs more money to do. So state coffers and local coffers are benefiting from that and reining in additional tax dollars for every dollar spent. So what we've seen is a continuation of productivity in terms of state and local revenue collections. We've seen rainy day funds stay at fairly close to all-time highs. So a really resilient market in terms of the muni market and the credit fundamentals.
Okay, excellent. So with that backdrop, then, how have municipals been performing? What have the returns been like?
So municipals have been performing well this year. Last year, they were one of the more underperforming asset classes in 2025. Some of that was really due to flows. The technical backdrop was negative for municipals, but fundamentally, it's been in a good place. What we've seen in 2026 is investors are starting to take notice of the high absolute yields that can be had in the tax-exempt muni market. So we've seen record-setting inflows come into the muni market, and that has led into really outperformance of municipals overall. We've seen outperformance in high yield relative to their corporate high yield counterparts, and likewise, we've seen outperformance in investment grade relative to their investment grade or treasury counterparts. And a lot of that is due to the technical backdrop. We've seen a ton of capital flow into the municipal market, which has been supportive of what we've seen on the other side is record-setting issuance for the third year in a row. We've seen record-setting issuance in the municipal market.
And so, municipal investors typically are interested in, obviously yield, tax-exempt yield, right? And so, with all these, with the good fundamentals behind it, behind the municipal market, I mean, wouldn't that argue that yields should come down because they don't need to, have such a high yield? Or, how does that compare to kind of other fixed income?
Yields still look attractive. Like I said, munis have outperformed other fixed income asset classes, but with respect to investment grade, you can pick up 50 to 60 basis points by going into the muni version of an investment grade credit versus the corporate version of investment grade credit. So I think they look very attractive relative to not only from a yield perspective, but also the relative value. Credit quality in municipals is typically much higher. They are typically essential services. Um, Distress levels are much lower. So, from a relative value standpoint, we also think it looks attractive as well.
Yeah, I mean, I think can you just dig into that a little bit? Because I think when people hear about, you know, especially high yield, which I want to talk to you about next, you know, it's often a misunderstanding between how municipal high yield is different than corporate high yield when it comes to like the average historical default rate.
Yeah. So high yield we think is particularly attractive. When you compare high yield municipals to high yield corporates, the default rate is 1/7 of that of the corporate high yield market. So, in other words, the corporate high yield market defaults 7 times more than the municipal high yield market. Not only that,
Historically and on average, and that all that sort of stuff.
historically speaking, right? And not only that, historically speaking, when you look at recovery rates, typically the range of historical recovery rates for the municipal high yield market is between 60 and 90%, where in the corporate high yield market it ranges between 40 and 60%. So less times where they get into distress and default scenarios, and when they do, typically there's less volatility and more capital preservation involved in the recovery associated with those distressed criteria.
All right, Miguel. So MFM, the Aberdeen Municipal Income Fund, can invest in high yield municipal bonds, and you were just pointing out that you can pick up some extra spread, some extra yield, right, from municipal bonds compared to corporates right now. Obviously, this fund is trying to provide current tax exempt income for its investors. So, how do you consider, in terms of security selection, high yield versus investment grade?
Yeah, we think high yield is extremely attractive right now, not only with the macroeconomic landscape that I described earlier being relatively stable, but the historical relationship between high yield and its other high yield counterparts look particularly attractive. So we've been allocating more to high yield. It's where we see value in foreign income focused vehicles such as a closed end fund. We think this is a great place to add income. And at the discounts that you're seeing municipal fund closed end vehicles start trade at, we think it's a really good opportunity to get involved in a attractive high yield market at levels that are historically inviting, and it's a good opportunity for investors.
Okay, excellent. So, can we just kind of delve more into your team's investment process and kind of how credit selection, security selection is kind of ties into like the overall macro environment, and not just for this environment, right? But just kind of over time for longer term shareholders.
Yeah, so we take a top down slash bottom up approach to our investment making decisions. Not only that, we have an open floor plan. So we meet biweekly with our economists. We discuss opportunities every day with our analysts, our traders, our PMs, individuals who are not part of the municipal team, individuals who are involved in infrastructure, individuals who are involved in ESG and environmental mandates. So we have we have a holistic view on what's going on really in the macroeconomic backdrop, and that informs our target areas, whether we're talking about sector target areas or geographic target areas.
But
from
target
there,
areas would be like areas where you either want to lower exposure or increase exposure. Is that
right.
correct?
So target areas would be certain sectors, certain parts of the country, in some cases, or even certain capital structures. We have open dialogue with our private placements team, and they inform us on parts of the capital structure that they're involved in, and that helps inform our decisions. Same with the equity team. So I think, really across the landscape, the dialogue across uh, Aberdeen as a whole helps us inform the macro approach and where we're looking to put money to work.
And you mentioned it, so that's kind of the top down, right? You mentioned it's also bottom up, which is kind of right.
Yeah.
Like we cover everything, right? So what goes into like a bottom up analysis on a particular security?
So what I just described kind of informs where we're targeting our focus in terms of sector and region and types of structures. Once we've selected a prospective investment, that's when the bottom up comes in. We utilize our proprietary research together with our analysts and really do a bottom up analysis of the socioeconomic landscape of the area we're investing in, debt covenants, their balance sheet metrics, really a bottom up of how the business works and the surrounding area that enables the business to work. So there's certain great businesses that have the difficult time surviving in areas where a population is suffering from outmigration. So I think having that full analysis done is really the only way you can make a good investment decision and have it be sustainable for long periods, which is really what we're looking for as a closed-end fund vehicle, just sustainable income over a long period of time.
Right. And so, speaking of sustainable income, so the fund is leveraged, right? Could you talk about, kind of target leverage range and, how do you determine the appropriate amount of leverage for the fund at any given time? That sort of thing.
Yeah, so leverage is an important tool to really magnify returns, especially in this vehicle. Target leverage somewhere between 30 and 40% is target leverage. I think an active approach to leverage is prudent for those in the closed-end fund space. In the municipal market, we have this a vehicle called tender option bonds, where you can employ and close leverage really within the span of 2 weeks. So having those flexible options, that vehicle is only available in the municipal market, but having those flexible options enable the management team to employ leverage when they think it suits them best and take off leverage when things become a bit more volatile. Right now, the curve is inverted in the middle part of the curve, but there is a significant spread between the long end of the curve and the short end of the curve. So
And the
now's a
long
good
end is
time.
where you invest, and the short end is where you borrow. So
Right,
the spread
exactly.
would help, like support the distribution.
Right. So as that spread widens, it becomes more fruitful to utilize leverage, which has been the trend really over the last 2 years. It's become wider and wider. Where the curve was relatively flat a couple of years ago, it's become steeper. So I think it's a good environment really to add leverage at this point.
Excellent. Well, Miguel, thank you for taking the time today. Appreciate your insights into the Aberdeen Municipal Income Fund. And thank everyone for taking the time to learn more about the Aberdeen Municipal Income Fund.
Thank you for joining us for another episode of CEF Insights. For more CEF Insights, videos, and podcast episodes, please visit cefa.com, your independent source for closed-end fund education data and insights.